Hello friends. So far I have discussed about profit and loss appropriation account. Okay, what we have is profit and loss appropriation account, and in that I have discussed about profit with you, that we get this profit from profit and loss account, because P&L appropriation account is nothing but an extension of profit and loss account. Okay. Second, I discussed about interest on capital. Okay, this is credited to profit and loss appropriation account. Interest on capital being an expense for the firm, because the firm has to pay interest on capital to the partners, it will be debited to profit and loss appropriation account. Next, I discussed about interest on drawings. Now, interest on drawings is an income for the firm. It is an income for the firm, so it will be credited to profit and loss appropriation account. Number 4, I discussed about interest on partner's loan. Okay, interest on partner's loan, I told you that even in case of partnership deed is silent as to the interest on partner's loan, the provisions of Indian Partnership Act 1932 will apply, which says that the interest on partner's loan will be paid at the rate of 6%. And one more thing is important for this, that it has to be paid even if there are losses. That means interest on partner's loan is to be paid whether there is income, profit or the losses. So that's why it is called as a charge against profit and not an appropriation. And how we deal this in P&L appropriation account? We will deduct this amount from the net profit that we transfer from profit and loss account. Okay. So next we have is remuneration. Next we have is remuneration to partners. Okay, this remuneration can be in the form of salary, or this can be in the form of commission. Okay, so now the partnership firm has to pay this remuneration to the partners if it is provided in the partnership deed, because if the partnership deed is silent, the provisions of Indian Partnership Act 1932 will apply, and the provisions of the Indian Partnership Act says that no remuneration is to be paid to the partners. Okay, so it can be two ways: partnership deed and the Indian Partnership Act. Okay, partnership deed says we will pay the salary and commission. Indian Partnership Act says no remuneration is to be paid to the partners. Now the firm has to pay this salary or the commission, that is remuneration to partners. It is an expense. What it is? It is an expense for the partnership firm. So how we treat in the expense in the P&L appropriation account? We will show it on the debit side. We'll show it on the debit side of P&L appropriation account. Like we treat interest on capital. Okay. So we have one more point to discuss before we move on to the practical problems. One more point we have is transfer to reserve. It is transfer to reserves. Okay. Now what it says, sometimes the partner decides that some amount of profit should be set aside for the reserves as reserves for meeting any kind of contingencies. Okay. Suppose they earn a net profit of 5 lakh. After interest on drawings, interest on capital, salary, commission, they are left with net profit of say 4 lakhs. Okay. This is the net profit for distribution. Now partners decide that out of this 4 lakh, 1 lakh we will keep for as reserves. 1 lakh we will keep as reserves. Okay. So now the final profits which will be distributed is 3 lakhs. The profits left will be 3 lakhs. Okay. So that means this is also a kind of expense, or we can say it is a reserve. Out of profits, the profits will reduce. So we will show it on the debit side of P&L appropriation account. So the two things I have told you today, one is the remuneration to partners. It can be salary, it can be commission, or any other kind of a remuneration. If it is provided in the partnership deed, we will have to pay this remuneration to the partners. It is an expense for the firm. That's why we will show it on the debit side of profit and loss appropriation account. If the partnership deed is silent as to the remuneration of partners, then the provisions of Indian Partnership Act 1932 will apply, which says that no remuneration will be paid to the partners. And the next point is transfer to reserves. Sometimes the partners decide that some amount out of the net profits should be kept aside as reserves. Okay, so the final profits will be the net profits minus the reserves. So the reserves will be shown on the debit side of profit and loss appropriation account. Okay, so this was all about the P&L appropriation account. We might get some other points we will discuss side by side. Now let's start with the practical problems. I'll start with the practical problems now. Okay, let's have a few practical problems. Let's see the first practical problem. Okay, it reads, Amit presents the following profit and loss appropriation account to his partner Bishan. This is the profit and loss appropriation account that is already prepared. Okay, so we have the profits and the losses. Okay, as 2,94,000. Amit's capital salary 1 lakhs to Bishan's capital salary 70,000. That means salary has been paid. Remuneration has been paid to Amit and Bishan. Interest on capital at the rate of 6% per annum. Amit has a capital of 5 lakh and 6% per annum interest on capital comes to 30,000. Bishan has a capital of 2 lakhs and 6% per annum interest comes to 12,000. Now, interest on Amit's loan at the rate of 6% per annum, 12,000. The partner Amit has advanced a loan, okay, and the interest at the rate of 6% per annum has been paid on that loan. Practically, what it should be done is that it should be deducted from the profit and loss account, that is the net profit that we get from profit and loss account. Okay, let's see the question. So they say the profit transfer to Amit's capital account is 5/7 of 70,000. 70,000 is the net profit left, and they have decided to share the profits in the ratio of 5:2. Okay, that's how Amit prepared the appropriation account. Okay, so it says further, Bishan is of the opinion that he has not been treated fairly. The partnership is not supported by a partnership deed. Very, very important point, that this partnership is not supported by partnership deed. That means the provisions of Indian Partnership Act 1932 will apply here. Okay. Now they say, point out whether the profit and loss account prepared by Amit is as per the provisions of Partnership Act 1932. The question itself has clarified that because the partnership deed is not there, the provisions of Partnership Act 1932 will apply. Even if the question doesn't say, it is a basic fundamental of partnership that if the partnership deed is not there, the provisions of Indian Partnership Act 1932 will apply. So they say you are required to draw the fresh profit and loss appropriation account on the basis of provisions of Indian Partnership Act 1932. I'll give you a second, read the question again. Okay, so let's start. Okay, I'll start now. I'll write down the basic things here. It's always good to write few basic points before you solve the question, because you are in the early stages of learning. You know, that makes a question very clear that what is required to be done. Now, first and the foremost, very important point is there that partnership deed is not there. Now, what it means, that provisions of Indian Partnership Act 1932 shall apply. Rest everything is very easy then. If you understand this, everything is very easy. Now, let's prepare. They have asked us to prepare the profit and loss appropriation account. Let's prepare P&L appropriation account now. Okay. The formats are very important. I am again telling you. So be careful with the formats. Okay. I'll show you the question again after this format. Okay, so in the format we have credit side here, we have the debit side here, here we have the particulars. Okay, amount, particulars and amount. Now The question reads, see the profit and loss appropriation account. We have profit and loss transferred from profit and loss. We have the profit of 2,94,000. We will write it here. By profit and loss account, 2,94,000. I am writing it here and not in the amount column because we might have interest on partner's loan. Okay. So let's see. Get back. Now it says that Amit and Bishan have been paid a salary of 1,70,000 respectively. Now tell me, partnership deed is silent. Provisions of Indian Partnership Act 1932 are applying. So whether they are eligible for interest on capital or not. What are the provisions of Indian Partnership Act 1932 regarding interest on capital? It says no interest on capital is to be paid. Okay. So you will write these down in the notes that since the provisions of Indian Partnership Act 1932 are applying, no interest on capital is to be paid. No interest on capital is to be paid as per the provisions of Indian Partnership Act 1932. Simple. Now, second thing. Sorry, it was salary. Okay. Let it be. We dealt with interest on capital. Now, we have salary. Similar provisions of Indian Partnership Act 1932. No remuneration is to be paid. Second, I will say no salary to be paid. Okay. You have to write this in complete, that because the provisions of Indian Partnership Act 1932 are applying, which says that no interest on capital is to be paid, no remuneration is to be paid to the partners. Okay. Next we have interest on Amit's loan 6% per annum. 12,000 is the interest on Amit's loan. Now it is a partner's loan. I've told you that partner's loan is a charge against profit. Okay. And not an appropriation of profit. So we will deduct it from here. That is interest on Amit loan, which is 12,000, and the net comes to 2,82,000. Okay. Next we have, that's it. So no salary is to be paid, no interest on capital is to be paid. We don't have any drawings. Interest on Amit's loan is a charge against profit. We have deducted it from profit and loss account. Simple. So what is the net profit we have? 2,82,000. Now the provision of Indian Partnership Act 1932 says regarding the profit that in the absence of a partnership deed, the profits are to be shared equally. That means this 2,82,000 will be divided among the partners equally. So here I will say to profit transferred to Amit and Bishan capital account and capital account. Okay. What we will have is 1,41,000 and 1,41,000. Total we have 2,82,000, and that makes our P&L appropriation account. we have redrafted this P&L appropriation account. P&L appropriation account of Amit was wrong. The claims of Bishan were wrong because the provisions of Indian Partnership Act 1932 were applying. I'll write this here. The profits are the losses to be shared equally. Okay, so this completes our practical problem number 1. Simple. Okay, this is the redrafted profit and loss appropriation account. Okay, friends, if you have any kind of problems, okay, and for the notes and these questions that I'm displaying, that I'm showing you, you can always mail me at ksjteaching@gmail.com. Okay, I'll mail you this question set. Okay, so I can mail you this question set, and the solutions will be doing here. So this is the solution for the first problem, right? Make sure that these notes are very important in the examination. You have to give these notes in detail, that because the provisions of Indian Partnership Act 1932 are applying, which says that no interest on capital is to be paid, okay, no salary is to be paid, and the profits and losses are to be shared equally. You have to mention this Indian Partnership Act 1932. These small things are very important from the examination point of view. These small things make a big impact on the examiner, that you know the things in detail, you know the concepts, that why it is like this, why the interest on capital is not to be paid, why salary is not to be paid, why the profits are to be shared equally. Okay, so you remember to write this as per the provisions of Indian Partnership Act 1932 in the absence of a partnership deed, right?